So you've decided to buy a business. What is the difference between buying the shares or assets of the business? How will it affect your future operations, and what is the right way to do? Hi, hello everybody, that's me again, Eugene from CBS, Canadian Business and Enterprise Services. And today in a short overview of the two types of business purchases. One, when you buy shares of the business, you technically become the owner of everything of the corporation, its operations, its assets. You technically simply replace the owner of the shares, the previous one, or purchase of assets, which means that the corporation, the shell that was operating the business, leaves, and you get into your new company or yourself all the assets of the business for future development. These two transactions, they have completely different legal aspects, and they will affect you differently in the future. Usually it is considered that the buyer would prefer to buy assets of a corporation, while seller would prefer to sell the shares of a corporation, and the reason is liabilities. So when you purchase a business, the question is which liabilities, which indebtedness do you buy along with that business? When you buy assets of the business, which means equipment, inventory, stock, client's portfolio, you do not buy the corporate entity that owned that whole thing before the purchase transaction, which means whatever that corporate entity owes in taxes, in environmental damages, in to a certain extent employment liabilities, you do not acquire that, which helps you from the financial side, of course, and which also protects you in the future if something happens. The seller that remained the owner of the corporation will be sued or prosecuted by the third parties for that liabilities. What you should pay when you pay attention to when you purchase assets is the question of securities, of guarantees, of payment warranties, liens that being placed or registered against those assets. You must do the search. They're very effective and simple tools to do the searches to make sure that what you buy is not being used as a guarantee to payment of loans, mortgage for the real estate assets, but there also could be liens for equipment, for inventory even. So make sure that what you buy is clean of all those liabilities, that the bank will come after you later on if the company, the seller, doesn't comply with its payment responsibilities. And on the other side is buying shares. So once you bought the shares, the individual, the business entity that owned the business remained the same. The only change is the shareholders changed. But that legal person who was managing the business and acquiring all the liabilities remained the same, which means that in the future, any liability that the business generated, such as tax, environment, employment, that I mentioned already, when they will come to realization, they will come back to you, which means you will have to pay it, and you won't be able to say, it's not mine, it's theirs, because what you bought is them. And you are now the owner of the company that will bear all those liabilities, which means that you have to be very careful from the perspective of existing potential liabilities, which might never come to fruition or might come and you will have to pay. So you have to verify very carefully what you buy when you buy shares. Again, make all the searches for liens, for security registrations, for mortgages, to make sure that what you buy is clean from financial liabilities, that there are no guarantors, no creditors, that can come and demand the payment of that money or amounts from certain assets that you just purchased. So these are two different transactions. They mean completely different things. And you might think, yeah, but the company has a name, I want a name. Name is just an asset. You can buy the name outside of the company. You just have to include the agreement of the company to transfer the name under your possession and stop using it, and that will prevent you from buying the company, but will allow you to use the name. Same thing with reputation, same thing with almost anything else. They're tangible, intangible assets. You can buy them separately from the corporation if you do it right. So as you can see, if you come to a decision that you want to buy a business, come to someone, come to us, come to any other professional that will help you, just to see the whole picture, to understand what you're buying, to realize the future consequences of the purchase, and how to structure your purchase transaction in a way that at least certain security will remain on your side, so hold back of portion of purchase in the case of potential future liabilities. So thank you for being with us. I hope I opened that subject to your satisfaction. If you have more questions, leave your comments in the comment section below. Request additional information, we will provide, or just visit our website www.cbes.ca, and whatever we can, I'll provide you. I'll make new videos, or I'll just answer your questions. So thank you for being with us, and I'm looking forward to see you soon. Bye bye.